Welcome back to this week's AMT Fresh Produce Market Report, proudly brought to you by Villa Crop Protection. It's been a fascinating week on the fresh produce market. Prices dropped across almost all major commodities, but changing weather patterns and shifting volumes could soon turn things around. And while the local markets faced plenty of pressure, developments in the international space, especially on the export side, could offer some much needed support next year as well. Let's break down what happened, what's moving globally, and what you can expect next. Over the past week, potato prices dropped again by 6% to 44.48 per 10 kg. Tomatoes also decreased sharply, trading 12% lower at R9.12 per kilogram, while onions continued their downward trend at R37.67 per 10 kg. Carrots traded 3% lower on R4.14, peppers dropped by 14% to R18.81, and cabbages decreased by 6% to R1.52. Sweet potatoes fell to R6.51, spinach dropped by 18% to R2.08, and butternuts slipped by 18% to R5.22. Pumpkins also showed a notable decline, falling 14% to R5.02. Garlic moved sideways on R43.79, while green beans traded lower on R9.27 and cucumbers declined to R14.56. With world-class solutions like Masterlock, tailored for South African conditions, Villa helps you manage risk and increase productivity with research-backed confidence. Overall, the vegetable market remained under pressure with limited demand, keeping most of these prices at lower levels at the moment. We are now in the middle of November, historically one of the weakest demand periods of the year. This seasonal decline has been a key driver behind the softer prices over the past week. Added to this at the moment, widespread rain across the northern parts of the country kept some informal traders off the trading floors, with hawker activity typically slowing significantly in wet weather. However, the same rain may bring some relief to the markets as well over the coming week or so. Harvesting is likely to slow down in certain regions, which could reduce volumes entering into the market and help stabilize prices, although improving demand remains critical. Turning our focus to potatoes specifically, October recorded the second highest volumes ever, with only 2019 seeing higher deliveries. Other years with similar high volume patterns include 2015 and 2018, periods that were also driven largely by Limpopo's strong production. The positive news is that in all those years, volumes dropped substantially in November and December, providing some support to prices over that period. A notable example is the drought-driven spike during 2015-16 season. Prices climbed from around R32 in November 2015 to nearly double that by March 2016. If weather conditions tighten again, as some forecasters suggest, we may see price support building towards April or March next year as well. A similar trend is visible in the onion market. October received record high volumes comparable only to 2018 and the strong production years of 2023 and 2024. We expect onion prices to remain soft with elevated volumes until around February next year, after which the market typically begins to recover. As with potatoes, weather will be a crucial factor. Any sudden adverse conditions could push prices higher by May 2026, when we usually see prices spike each year. Please leave me a comment if there is a specific commodity you'd like us to discuss in next week's episode. Moving over to the fruit markets, bananas decreased to R11.16 per kilogram, apples traded lower at R12.88, and pears eased to R9.82. In the citrus market, orange prices dropped to R8.30 per kilogram, lemons increased to R8.47, naartjies jumped to R9.01, and grapefruits almost doubled to R9.27 per kilogram. Avocados rose by 12% to R29.25 per kilogram, while table grapes fell sharply, trading 36% lower at R61.08. Pineapples decreased to R11.58, blueberries climbed to R40.18 per kilogram, and watermelons dropped to R1.18 per kilogram last week. Current forecasts indicate that apple prices are expected to peak at around 16 Rand per kilogram in January next year before trending downward. Pears are likely to peak earlier around December at roughly 13 Rand per kilogram, followed by a decline into the new year. Banana prices are expected to peak this month and soften into January. Oranges and avocados should continue their upward trend into February before easing as new season volumes usually arrive in March each year. A potentially significant development for the citrus industry is the recent announcement that the Trump administration has exempted citrus from certain US import duties. This is an important shift because South Africa is one of the major suppliers of citrus to the US markets, especially during their off-season, which is usually from June to October each year. The exemption means South African citrus may enter the US market with lower landing costs, improving price competitiveness and potentially increasing export volumes by then. Increased access to the US market typically reduces domestic supply pressure, which can provide added support to our local prices, especially when export programs begin ramping up. If the exemption remains in place through the main export window, the industry could experience stronger demand, improved back-out incentives, and better early season price stability next year. This will be particularly positive for commodities like oranges and soft citrus, which already have established market channels in the US. That's your AMT Weekly Fresh Produce Outlook, made possible by Villa Crop Protection. Remember to follow AMT on all social media platforms for daily market updates. And we'll see you next week with the latest market trends again.